Hi, everybody. Good morning. This is Dan Sheridan. It's around lunchtime Monday, March 11th. Here's my plan for the week. You say, what's the big picture? What's driving the market this week? Well, NVIDIA. The market was down Friday. NVIDIA was down. Market was down 30 or 40 points today. I think NVIDIA had a bit to do with it. NVIDIA had lows of 841 today, and now it's come back pretty strong. 874. I think that has helped the market. So that's a positive. This week, I think how NVIDIA goes, that could be a trigger. The big news this week is the CPI on Tuesday. That'll come before the market opens. That's tomorrow. And then you have, I think, the jobs on unemployment on Thursday morning. I think those are the two key things. I think the bigger thing is the CPI tomorrow morning. So I would wait. So currently, if you said, Dan, for range-bound traders, where are you at now? Red, thinking of a Chicago stoplight, red, yellow, and green. I'm red. Dan, what does that mean? Don't trade for range-bound traders. Why, Dan? Is it horrible to trade today? No. Dan, give me one of your bad analogies to explain. Here's the explanation. You go to the beach. The lifeguard says, we're kind of at yellow right now. It's kind of like a little bit of a warning. I saw a couple jellyfish. The riptide is a little bit today. Waves are a little high. It's not bad, but, there's a bit of risk. I got 3 little grandchildren with us. It's not worth it. Let's go to a library or something. Let's do something else today, right? Is it worth the risk? Could you say, well, the next day I talked to somebody and everything worked out. The kids, hey, it's a risk day. What are you really going to bring in one day of theta today? Is it worth it? I'm looking over a 5-day period, just like when you look at weather. Okay, which days do I go outside? Which day do I wash my car? Let me see. Tuesday and Thursday are really sunny days. Monday and Wednesday more rainy. You know what? I'll schedule it Tuesday and Thursday. Same principle. So not trade today. So Dan, what are you saying? My entry days for range-bound trades would probably be unless the SPX tomorrow afternoon Tuesday is over 1.2% move in the SPX. I'll put a trade. I'll look to put some of the trades I'm going to talk about tomorrow. Right. So that's where I'm at. Red for today. Now, what are some ideas of some trades I put on? I'd be looking at. Number one, and this would be tomorrow. So I'll give you the trade. I'll give you the expiration, but I wouldn't put it on until tomorrow, Tuesday. Here's a combo, right? Here's I did a calendar about roughly 40 points down. Let's see or 50 points down, roughly 50 points down. Let me see what we've done here. We've come back a little bit. So let me just go up. Not that I have to make it perfect, but trying. All right. So this is what I'd look to put on tomorrow afternoon, as long as we haven't moved more than 1.2% in the SPX. It's a combo. Calendar on the downside, buying the March 26, selling the March 22, and I'd look to go about 50 points down. Today, 50 points down from 51.15 is 50.65. Do it in the puts. On the upside, I'm doing a 30 wide butterfly centered at 51.65, 50 up. It's going to cost you about $6, $6.50. And you get a wide range there, right? You get a nice wide range. Here's where we're at now. That's the combo. That particular one is going to be 11 days out on the combo. VIX is 15.5. The range for the whole year, the 2 months and a week we've been in this 2024, the range has been 12.5 to 16 in the VIX on a closing basis. I might want to be a little bit net short Vega, but again, if the market were to break down, we could hit 20 quick. So it's still a narrow range. What's another idea, Dan, for a trade idea? Well, if I just look at a butterfly, I'd go out to April 5th. So I talked the combo. It's about 11 days. Next thing, Dan. A April 5th butterfly, 70-60 or 70-65. I'd probably go 70-65. Let's take a look. I'll give you 3 trades. If I center it, I'm just center. If we're 40, 51, 14, center just the next strike up, 51, 20. So I'm diversifying the duration, 70 down. $60 up. And that's neutral. Totally neutral deltas. Or I want to be a little bit short, just a tinge. A 70-65, I'd be minus 0.9 delta short. I'd probably be looking something like that. Or give you an idea, do the combo, which is neutral tomorrow. That would be 11 days from expiration. Trade one. Trade number 2. Do a 70-60 butterfly centered at 51.20, a 70-60. So that would be neutral deltas. Okay, fine. We're in the neutral business. And I could put it right at the strike. So right now we're at 51.15. That's trade number 2. And then trade number 3, a trade that the deltas are near a range bound type, what we like, but 0 risk on the downside. Now, if you want to put 0 risk on the upside, that's fine. And this would just be a classic skip strike butterfly. And here are we at 51.15. And the short strike on the upside, 5,300. In this example, the risk on this would be about 875 for your margin. And you're bringing in a credit, let's say of around 120. So good yield, no risk on the downside. Again, you could structure this for the upside. So good yield. I talked about it in one of the earlier sessions today. You know, if we go up in this area, 51.70, I might just add a put credit spread, turn it into an iron condor. I can do a put credit spread for 0 risk, for 0 margin. But this would be again, just a recap, a combo, an 11-day combo, neutral, a 25-day butterfly, on April 5th. And then I go back to you can do a 25-day or an 18-day skip strike butterfly. All right, skip strike just means I bought the 52.90s one, sold 2 5300s, skipped the 5310s, and sell 2 5320s, right? And I would do that either to diversify the duration, maybe do it instead of 25 days, 18 days. So I have an 11-day combo, 18-day skip strike butterfly, and a 25-day butterfly. And you might put on, some on Tuesday. I'd wait till Tuesday. I wouldn't put anything on till at least midday. All right, folks, that's my 2 cents for this week. Have a nice week. Thanks again. Appreciate it.